Hello, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 7th of November, 2008, and the market closed here. We had a pretty quiet session today. Market was kind of trying to stabilize a little bit after the large losses of the last 2 days. And at the end of the day, we did finish with a 2% gain, but most of that came very early in the day. We saw a little bit of volatility. Let's take a look here, actually. So we had a little weakness after the gap higher. Market then took back the daily VWAP in here and continued higher. And then I think the market was basically just waiting for Obama in here to make his first speech. It ran up initially just a little bit, and this is about when he took the stage, and this right here is about when he concluded his statement. So initially we had some sell-off in there. As basically there was nothing he could say that was going to be interpreted as bullish, I thought, but the market did recover back above the daily VWAP in here, but really a pretty quiet session for an up 2% day. Overall, for the week, we lost still about 5%, in spite of today's 2% rally. And earlier in the week, it was clear that when we broke back below that 3250 in the 5-day moving average, we've got that 5-day moving average declining once again, and that puts the burden of proof again back on the sellers as we remain in a primary downtrend, and in looking like maybe we can continue lower here. It could potentially turn higher. There's still a lot of people looking at this market thinking, well, is this potentially still an inverted head and shoulders pattern? I suppose you could still call it one. It's kind of a little bit messy in here, and I've gotten actually quite a few emails from people over the last 2 days talking about inverted head and shoulders patterns. The patterns are like a Fibonacci level. They're something to observe and something to take note of when it appears the rest of the market is. That is, if it's relevant to the market, then we want to include it in our analysis, like the 61.8% retracement of this move here. The market has come down and it seems to be holding above that level. That level is also coincident, switching to a 10-minute time frame here. Actually, let's go back to the 30. Coincident with this prior level of resistance that was broken on very heavy volume this day. The market broke that uptrend line back below the 5-day moving average. So it's a gradual shift, that is, from the buyers to the sellers. But in a primary downtrend, the path of least resistance obviously remains lower. And while we want to be prepared for anything that possible, such as a reversal, we have to keep in mind what's most likely. And when the path of least resistance is lower and we've got a declining 50-day moving average, it means that what's most likely to occur is a continuation of the more powerful trend on the larger time frames. We had a little bit of resistance materialize here at about 3150 or so during the day here today. It did take out that 3120 from yesterday, but 3150 seems to be the area where we found a little resistance. Let me just change this scaling a little bit so we can see it a little bit more clearly. But obviously, the thing that should point out to you is we do have a declining 5-day moving average, and that makes intermediate term rallies guilty till proven innocent. Cast an eye of suspicion, even though it's at this 61.8% level. Next week, we have the potential that maybe we're going to go back down and test these lows, or maybe we're going to continue higher. I've been advocating for most of the year that we're in a day trading environment, and I continue to believe that we are. If you're someone who's more comfortable holding for a few days, go with the direction of the 5-day moving average is generally the way you want to go for your swing trades. Let's take a look at gold. Gold, really nothing changed there. It was up 28 cents today on the GLD. Still looking broken, still looking vulnerable. The USO, the ETF for the oil, was down another 7 cents today, so oil's still clearly broken. You know what I was looking at today was the UNG, which is the ETF for natural gas. And speaking again of inverted head and shoulders patterns, we may see one developing in here. We've got a left shoulder potentially ahead and maybe going to form a right shoulder. This 50-day moving average begins to start to flatten out. UNG, or natural gas, could be the group that first rallies out of here. Now, what's most likely, if it does get above that 50-day moving average and that sort of thing, is then it's going to rally up to the prior levels of resistance. It's going to be back and filling. There's no reason to get involved on the long side in this natural gas, and I don't know why it's let me just change this here. UNG. There's no reason that I can see to get involved in this UNG. But here on this 30-minute time frame, here's where we have what appears to be this potentially the right shoulder in here and about 31.75 or so. Then perhaps you take small speculative, and they're very, I have to emphasize speculative because we still have that declining 50-day moving average, but seasonal wise and that sort of thing, you could make an argument that maybe natural gas is a good play. High risk though, so just know that going into it. The Russell 2000, here again, let's talk about these inverted head and shoulders patterns. First of all, before we get to that, actually, the 50-day moving average, the 200-day moving average are both declining. That puts the burden of proof basically on the buyers in here. We've got this resistance up here. Now this is about 55.25. You can see here even on this daily time frame that perhaps we're still within the confines of building a right shoulder over here. So let's look at the 30-minute time. Let's look at the hourly time frame actually, and let me just change the scaling once again so we can get just the relevant data in here, and I can draw a line straight across. That's where that neckline would be. Here would be our left shoulder, our right shoulder, our head rather, and our right shoulder potentially forming. When we take a look at the Fibonacci off these lows to this high, you can see we're holding at about the 50% retracement level, going down to a 10-minute time frame. We've got still though a declining 5-day moving average right in here, and we want to be aware that rallies are less likely to follow through when that 5-day moving average is declining. Here on the 10-minute time frame, similar to the 30-50 level on the Qs, we have a little bit of short-term resistance at 51.10 or so. Perhaps breaking above that, we make a rally up towards that declining 5-day moving average, and right now, that's about 52.5 or so. And going back to the Qs, perhaps breaking above 31.50, we go up and meet that 10-day moving average and find a little, 5-day moving average, the orange one here, and find a little bit of resistance. But really, the burden of proof in all these markets still remains on the buyers. The sellers are clearly in control here, and that hasn't changed. The Russell 2000 for the week lost 5.8%, even though it was up 2% today. Let's take a look now at the financials. They were up 26 cents, just 1.8%. So on a percentage basis, they were still weaker. They're down over 50% year to date, and really no signs, no clear signs of any bottom in here. We still, what we're really looking at now, it appears, is that this market's more range bound between 16.5 and on the downside about $13 a share. Looking at a 30-minute time frame, we can see that with a little bit more clarity. Here's that resistance that we've seen up about 16.50, and we're down towards the lower end of it. As I pointed out yesterday, we have retraced more than 2/3 of the rally from this low right here on the 28th up to this high right here that we saw earlier in the week. So in that level, seems maybe it's acting as a little bit of resistance. So the financials, which got us into this mess, are still underperforming. So until these guys turn, you really can't have much faith in any rally attempts overall by the market. A little bit of resistance at 14.50, declining 5-day moving average. The market just remains very troubled and guilty till proven innocent. I wouldn't be surprised to see it down at 13, but 16.5 wouldn't surprise me again either. So you've got to just be nimble in this market and be prepared for continued volatility is what we're seeing. The S&P 500, I've got a bad print in there. Let me just change that on the daily time frame as well. We'll just kind of cover it up like that. So we saw that the market was up 3.3%, a little outperformance by the SPY today. We've got that 10-day moving average crossing above the 20. Basically, that's what I refer to as indecision when we have moving averages crossing. What good does that do? It doesn't really do us much good, except to say that the advantage isn't to the longs or to the shorts in here, but because the primary trend remains lower, the burden of proof is on the buyers. This just represents a possible turning point, and that occurs obviously, as the market gyrates back and forth through time here. Now, this market had broken that above what looked like its head and shoulder pattern resistance here at about 99 and a quarter earlier in the week. As we often see, from failed moves come fast moves or vast moves, but whatever saying you want to say there, you have to pay attention to those failed moves. Very similar, actually, to the 1 minute time frame today, and that's where that bad print occurred that for some reason they're not taking out, so I have to change the scaling. But right here, the lead up to the Barack speech here today, the market rallied up and then it failed. So from this failed move higher here, which was unable to make a new high for the day, from that failed move we saw a fast move lower, and obviously the SPY, you can see, finished much stronger than the other markets here today. Let's get this scaling fixed on the 10-minute time frame. And you can see that similar to the 3150 level, and I've forgotten the number, but whatever it was on the IWM, we've got this market made it right up to that 9350, where it's got some resistance in here. Bullishly, constructively, we've got higher lows and we've got some resistance. Bearishly, we've got the declining 5-day moving average. So perhaps we get a move up towards that 5-day moving average, up to this prior level of support that was very important as it broke earlier in the week. But it remains really a lot of mixed messages in this market, with a primary downtrend, though. Burden of proof continues to be on the buyers here.